Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. These are the headlines from the startup world. Policy Bazaar's parent PB Fintech to consider acquiring an insurance major in UK and Europe. Sources say the deal size could be around $1 billion. This comes a day after board approved raising funds through a QIP.
Loop AI, the enterprise-grade AI platform purpose-built for the restaurant and retail back office, has raised $14 million in Series A funding round. This funding will be used to expand Loop AI's product suite and grow headcount for their offices in New York, San Francisco, Tampa, and Bangalore.
3 managing directors, Ashish Agarwal, Ishan Mittal and Tejashwi Sharma, are leaving Peak 15 Partners to set up their own fund. The VC said the moves are aligned with its evolving investment strategy amid rapid technological changes. This will be another investment firm spinning out of Peak 15 following Westbridge Capital and A91 Partners.
Elon Musk's SpaceX will acquire his AI business, XAI, valuing the combined entity at $1.25 trillion. Consolidation comes ahead of SpaceX's planned IPO later this year. Musk says the combination creates an innovation engine, bringing AI rockets, space-based internet, and media under one roof.
OpenAI CEO Sam Altman has strongly dismissed recent rumors suggesting the company is dissatisfied with NVIDIA and exploring other options for its AI infrastructure. In a post on X, Altman emphasized OpenAI's long-term commitment to NVIDIA.
Well, those were the headlines we've been tracking for you this evening. Electric mobility platform Drivn has secured financing commitments of up to $80 million from global financial services group Nomura to roll out nearly 1,000 electric buses and trucks across intercity transport and heavy logistics over the next 18 months. Now, this comes as the India-US trade deal promises lower tariffs, deeper technology ties, and stronger capital flows for the EV ecosystem, even as challenges around capital intensity, uptime, and reliability continue to slow adoption in heavy transport. Drivn is betting on an asset-owning, long-term leasing model to bridge these gaps and accelerate India's shift away from diesel. So what does this deal signal for commercial EVs, and can this model scale where others have struggled? I'm joined now by Alpana Jain, the co-founder and chief business officer at Drivn. Alpana, welcome to Startup Street. With India and the US having now sealed a major trade agreement, lowering tariffs and expanding market access, how do you see this pact shaping India's commercial EV ecosystem, especially in terms of access to US capital, advanced EV technologies, or supply chain integration for heavy electric buses and trucks?
Good evening, Shruti. It's a massive accelerator, frankly, and it comes at a perfect time. While India has already become a global hub in two and three-wheeler segments, heavy commercial vehicles are a different beast altogether. They rely a lot on high-performance components, which global supply chains control. So the pact does 2 very important things for us. One, it lowers the tariff barrier. And second, it gives and signals stability to US institutional capital. So access to deep technical funds eases our access to capital and lowers our cost of financing ultimately.
All right. Alpana, given the trade deal's emphasis on deeper economic and technology cooperation, should companies like yours be thinking more strategically about trans-Pacific partnerships or sourcing critical EV components from the US?
Yes, absolutely. We should be actually moving from cost-based model to value-based procurement. We aren't just looking at procuring inputs, and we are actually looking at importing technology and innovation and topping it up with the scale of Indian manufacturing.
Right, Alpana, let's get to the funding now. Drivn, like I mentioned earlier, has just announced financing commitments of up to $80 million from Nomura. Is this largely asset financing, or does it also go into building charging infrastructure, technology, and on-ground operations?
So the financing that Shruti Drivn has secured of $80 million is primarily asset financing.
Okay.
That will put a fleet of 1,000 vehicles between buses and trucks on the road. And what it in turn does is actually assure offtake for charging infrastructure, which will then be concurrently put these fleet on the ground over the next 6 to 9 months.
All right. So like you mentioned, this funding supports phase one deployment of nearly 1,000 electric buses and trucks by quarter 4 FY27. You said the rollouts could begin soon, but where will these vehicles hit the road first?
Very happy to report that the rollouts have already begun.
Okay.
You would see these buses on some of the high-density intercity routes in North and South India, such as Delhi, Dehradun, Hyderabad, Vijayawada. And on trucks, they are being deployed in cement logistics first. And these early deployments will make us into an EBITDA positive company right at the beginning.
Okay. Alpana, you're entering the market with MOUs across OEMs, charging providers, energy partners, and maintenance players. How critical is this ecosystem coordination in making large commercial EVs work reliably and at scale? And what does your model change for fleet operators compared to owning diesel assets?
As that's a great question, Shruti, and this is where our background and the team's experience matters most. We actually approach this segment with the discipline of a financier. So we structure rigorous back-to-back contracts with OEMs and energy management providers that actually enforce uptime guarantees and helps us in turn, strengthen our underwriting model. So that's how we are looking at this.
Okay. You're also aligned with FAME and PM e-bus Seva and targeting Scope 3 emission reductions for sectors like logistics, cement and steel. Alpana, are you seeing real commercial demand from these hard-to-abate sectors, or is adoption still largely policy-driven?
If you had asked me, Shruti, this 2 years ago, I would have said that it is policy-driven.
Okay.
But today, actually, the fundamental discussions have shifted. The conversations have shifted. It is actually very, very commercial. If you talk to the CEOs in cement, steel, mining, they would actually be talking about TCOs and not really subsidies. So I see that demand is really real.
All right. Drivn doesn't just finance EVs, you buy, own and lease them. Looking ahead, Alpana, are you building a fleet company, a financing platform or long-term EV infrastructure for India? And also share with us what the kind of revenue growth you're targeting over the next 2 to 3 years.
Great question, Shruti. We are actually imagining Drivn as the financial backbone of commercial EV segment. And we are actually matching it with blistering pace and scale up of the fleet. We are looking at deploying the 1,000 vehicle fleet in over 6 to 9 months, starting now, and then have planned to scale it up to a business model of 5,000 vehicle over the next 2 to 3 years.
Well, we wish you the very best for all these aggressive growth plans that you just mentioned. Many thanks, Alpana, for your time and for joining us on Startup Street.
Thank you. Thank you so much.
On the hot seat today, Truva, a full-stack resale homes platform, has raised $9 million in fresh capital, led by Stellaris and Oreos, with debt support from Stride Ventures, promising to help sellers close deals 7 to 10 times faster. Truva is doubling down on data backing pricing, inventory-led execution and expansion beyond Mumbai into new metros. Joining me now is Puneet Arora, the co-founder and CEO of Truva, to talk about the fundraise, the business model and what it takes to bring transparency to India's fragmented resale market. Thank you so much for joining us on the show today. Like I said, you claim Truva helps homes sell 7 to 10 times faster than the market. What is the current average sort of time to sale on your platform versus the traditional resale market? And how consistent is this across micro markets? If you could sort of take us through your key offerings.
Absolutely. Thanks for having me here, Arundhati. I'll talk about the sellers first, and then would also maybe talk about how we help buyers. Today in the markets that we operate in, average time to sell is anywhere between 6 to 9 months. We operate in Mumbai, in markets like Powai, Goregaon, Andheri. And for us, the average time to sell has been between 30 to 40 days. And there you see a big difference. Now, the big question is how we are able to sell faster, how we are able to bring this 5 to 7x difference, right? So there are two things that we do. First is in a resale property, the house is usually older. It's 5-10 years old. It's probably not very well maintained. We stage our houses, which means that we fix if there are any issues on the house, we make it super presentable. And the second is just our superior distribution. We are very omni-channel. We work with brokers, we work with listing platforms, And so the combination of these things really means that we are able to sell significantly faster than the market.
Sure. So you have an omni-channel approach in how you sell your houses. But you've crossed 500 crore rupees in resale value sold across just 7 micro markets in Mumbai, right? What does this sort of translate into revenue and unit economics today? And how do margins change as you scale city by city?
Absolutely. So today we're doing about 18 crore annualized run rate based on numbers from recent months. Um, Unit economics are super healthy. We're positive at a unit economics level. I think what is the most interesting for us is today if a home buyer decides to buy a house, they have two options: either they buy something under construction or they buy something in resale. Under construction, you're buying a house without seeing it. It's like getting married without seeing who you're getting married to. And in resale, there's absolutely no organized player. The experience is super broken and unprofessional. And so when Truva comes in, we do our legal checks. We make sure that the house is well inspected and you're getting something that you can be rest assured won't give you problems as soon as you buy it. So that's sort of what we're all about. In terms of how we intend to grow, I think we've grown 6x over the last year. We'll probably grow another 4x over the next year. As we move to other markets, today we're doing anywhere between 1.5 crore to 10 crore houses. We will start doing lower ticket size. We've already seen lower ticket size houses have better unit economics. So actually super excited to see, how we do in cities like Delhi, NCR, Bangalore, where our average ticket size is probably going to be lower.
Sure. So you're looking at lower ticket size. And now True IQ is positioned as the core differentiator using over 1,000 data points for unit level valuation, right? So how accurate have these valuations been versus final transaction prices? And does True IQ sort of improve the liquidity predictability for sellers?
Absolutely. So, if you go buy a house today in resale, you usually don't have any, like, pricing is super opaque for a buyer as well as a seller. And what TrueIQ does is that it takes data from different points. So, for example, we look at transaction data. This data is in government registration records. We also collect a lot of data from on ground about what the house is exactly like, what the view of the house is. A swimming pool facing house will cost more than a slum view facing house. We look at what the floor is, amenities in the building, and so all of this data sort of goes in, and the algorithm gives out a price. Today we are already about 99% plus accurate, which means that the price that we believe the house will sell at is roughly like within 1% of the house of the price we actually sell the house at.
Sure.
And not just the price, TrueIQ, what it also does, it helps us know how fast the house will sell, right? So you like different houses have different kinds of demand based on ticket size, based on what the view is like, what the vastu is like. In India, 70% buyers want a vastu compliant house. So it takes into consideration all of these things, and we know not just like what price it will sell at, but also how much time we'll take to sell the house.
Sure. And you've just raised these funds, right? And the round includes both equity and venture debt. Why was debt sort of important at this stage? And how capital intensive is the inventory-backed model as you expand into Delhi, NCR and Bengaluru?
So one big difference, Arundhati, between what we do and what some of the other players in the industry do is that we don't buy these houses upfront. We get exclusive mandates from sellers. This is done by paying a small token, usually 1% of the value of the house. And so while there is some working capital deployed, it's super capital efficient because the deployment is limited. And that's what the debt helps us do, actually. It helps us manage our working capital. We take about 4 months from the time we get an exclusive mandate to get our revenue back because there are a bunch of steps in between. And so the debt from Stride Ventures really helps us managing our cash flows, while we can use equity to really expand the business and grow into more micro markets and more cities across India.
Sure. All right, Puneet, we're completely out of time, but thank you so much for joining us on the show, and we wish you all the best on your journey going forward.
Thank you.
Well, with that, it's time for us to head into a short break. But coming up, India's beauty market is shifting rapidly towards premiumization, with fashion-led collaborations emerging as a powerful growth driver. K-Beauty teams up with Falguni Shane Peacock, blending high fashion with mass premium cosmetics. All the details when we return.
Welcome back. You're still with us on Startup Street. India's beauty market is seeing a clear shift towards premiumization, and fashion-led collaborations are now becoming a key growth lever. In its first ever couture collaboration, K-Beauty has partnered with designer label Falguni Shane Peacock, blending high fashion with mass premium cosmetics. For K-Beauty, which already operates at a 350 crore rupee annualized run rate, the collaboration signals a push towards stronger brand positioning, higher value consumers and global ambition. For the fashion industry, it reflects how couture is moving beyond the runway to build scalable consumer brands. As Indian beauty labels eye international markets and consumers show a growing appetite for premium products, the big question is, can couture drive volumes without losing accessibility? Xenia Baria dropped in to check it out.
J-Lo, Lady Gaga and Queen Bee. Falguni Shane Peacock have dressed them all. When you think of Falguni and Shane Peacock, you think statement outfits and global red carpets. Now imagine that same design language showing up on your makeup shelf. That's the kind of idea inspiring the new collaboration with K-Beauty, making it more accessible. Let's take a closer look. K-Beauty isn't a legacy luxury brand. It's young, it's digital first, and it's democratic. What about that philosophy aligned with the way you see the future of luxury?
I think as Falguni Shane Peacock, I would say we are a very young brand. You know, we dress the modern bride of India, rather the world. And I think right now, you know, the whole feel of beauty is changing. Like across the world, people are going and trying younger brands, and K-Beauty is, you know, the way they've got the formulas is amazing. So I think they will be a legacy brand, but yes, they are young, and I think that's what we as designers are. So it's a great collab.
It's a brand in partnership between Nykaa and Katrina Kaif. One that we started about 3-4 years ago. Today, it's a 350 crore GMV annualized run rate brand. It's become, you know, quite sizable. It's also a top 5 brand on the platform. When we were thinking about, and with K-Beauty, we're always thinking about how to sort of introduce the customer to more and more interesting creative concepts. And therefore, we had this idea to find, you know, an amazing designer collaboration and do this first ever couture collaboration with Falguni and Shane Peacock.
Falguni, you are known for your dramatic style. Talk to us about how that aesthetic translated into makeup, packaging and design.
I think for us, you know, as we're known as couture designers, it was a natural progression for us. And when Katrina called, we were like, you know, should we do it? Should we not do it? And in half an hour, it was a yes, let's do it. But the whole idea about kind of packaging couture into a lipstick or into the palette and give a little piece of the brand was what, you know, the idea was. And that's why the lipstick has that beautiful French gold, which just stands out from the, you know, other ranges that are there. It all started with, okay, what color should we do? Whether it should be a metallic. I was like, you know, I want the lipstick to feel heavy. It needs to feel couture, like a couture outfit. There is beading in it. There is some weight in it. There is a story to tell. We started off with 8 shades, then it went to 10, and then it went to 12. I'm like, the range looked really beautiful. So we started building more and more. And we decided that we'll do, you know, lipsticks only. And then suddenly we were like, you know, why not give it like a whole sort of a wholesome look? The collab needs to feel a little more than just lipstick. So that's why we decided to do the face palettes. It's a day palette and it's an evening palette, and you can mix tones. It's got the contour, the highlighter, the blush.
Couture often feels out of reach. When someone hears couture lipstick, they expect it to be expensive. How much does this actually cost, and how did you decide the price point?
So with K-Beauty, we had gone international a few months ago. So we had gone to Space NK in the UK. And so we are very clear that this launch had to be something that went 360 globally. And so there's been a simultaneous launch in both the UK and in Dubai at Nysaa. In terms of pricing, it is slightly more premium in the UK. And that's also just, you know, the nature of the cost of actually taking a product international. So it's broadly being sold at about 2,500 rupees in the UK. So slightly premium than what it is in India. And then that's to reflect the cost of actually taking it abroad and the cost of doing business there.
At the heart of it, it isn't about beauty or fashion. It's about how people want to experience luxury. Closer, more personal, and very much their own. Couture will always rule the runway. But moments like these tell us how they all mingle in and come together in our everyday lives. In Mumbai, Zinia Baria.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.